Here we have the current stock market update for NIO Incorporated, stock ticker NIO. Before we begin with today's chart analysis, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts below in the comment section so that other traders will be able to find this information more easily on the platform. So here we have the 1 hour price chart. Every candle in this price chart would be a 1 hour trading period. And as we can see here, the stock is managing to hold on to its recent gains in a fairly impressive fashion. So essentially what we have been watching here, and we're sort of redoing this entire analysis because it does look as though our prior expectations have played out. So we're going to kind of take a drilled down view of things and look at a reassessment of the situation with more of a bear chart, not as many trend lines and drawings and things like that. So as we can see here, share prices have managed to make this very impressive rally from roughly $3.68 all the way to $5.61. As we can see, this occurred in a very short period of time. Essentially, this rally started during the August 29 trading session, and we reached these near-term highs coming in right around the September 9 trading session. So this is a very short period of time here. We're really talking less than 2 weeks for most of this activity. So this is a very impressive move to the top side. And the real question here is whether or not share prices will be able to extend this move higher, or if we will be looking at a retracement at this point and start to give back some of these gains. So in this video, we will be looking at some important price levels that traders can use to develop profitable trading strategies for this stock going forward. So as I said, share prices have rallied into this $5.61 area. And since then, the pullbacks here have been quite minimal. We can drill into this price chart a bit here, take a bit of a closer look, and see that the movements to the downside have been very small in size. Near term, the most recent support zone has now started to develop right around $5.32. So relative to the highs here, we're not even talking about a full 30 cents in downside trading movement. So we are at the moment starting to re-threaten those prior highs. And the question here is whether or not we will be breaking out above those $5.61 highs. If we pull out a bit here, we take a broader look at this chart activity, we can see that there are some resistance zones that do rest slightly overhead. One that I would point to in particular is this $6.01 zone. So we call this roughly $6 per share. Here we can see that this level was tested on two separate occasions, which means that this is now a double top formation, or possibly even you can call it a tweezer top formation, because these are roughly spike highs into this area, $6. And we did see them on two separate occasions. The last time the share price did manage to move into this area, we did see that share prices did have a fairly significant drop here, losing almost half of the value for the stock during this process and during this move lower. So as we can see, this is a very critical level of resistance that could turn out to be a formidable or sort of dangerous price zone for this stock. So this is a major area that people will need to be watching if you are currently holding positions in NIO. Currently, we're looking at share price movements that are less than 50 cents away from this area. So we're actually fairly close here at the moment. So it is easy to sort of get caught up in the enthusiasm and see, the share prices have established a tremendous move higher here, tremendous run higher. But it can be easy to sort of lose sight of the fact that, share prices do have resistance zones that are relatively close by, and this could start to limit gains here going forward. So if we do start to see an extension here, and it is looking like that should be the case because price movements to the downside have been quite limited. So if we do see a break above $5.61 and perhaps a daily close above that area, that would be a bullish signal. And it would definitely suggest that the next upside target is that $6 level. The real question then at that point will be, do we see a price failure, or do we see prices start to break out at that point? There is a fair amount of short selling that is devoted to this stock. This is sort of a controversial stock that tends to be popular on the social media platforms. And this can also attract short selling activity. So movements into this $6 level, it can't be surprising then to see, if we do start to encounter some short sellers into that area, it really shouldn't be surprising. A large part of this comes from the fact that indicator readings are still trading in overbought territory. We did sort of move out of here slightly for a short period of time, but we moved right back into this area during today's trading session. So these prior price movements caused the relative strength index, which is the purple line at the bottom of the price chart, to move into nearly the 90 level. So it'd be roughly 89.77 on the relative strength index reading. So that's an extremely high level. 90 would be considered extreme highs, and that's typically considered to be an unsustainable area for trading. So not really surprising here to see some price movements move back to the downside. But what we can see here is that we really haven't broken many support zones here. Previously, what I was looking at as a potential downside price movement here, or a break of an important break to the downside, would be roughly $5.15. If we saw prices break below there, that would then mean that we lose the 23.6% Fibonacci retracement of this ascending move higher. And then in addition to that, we can see that this area is also a prior price high, which was established during the September 6th trading session. So we've got some historical levels here. We've also got some Fibonacci levels here. But as things currently stand, we have not been able to retest those levels to the downside. At the moment, share prices are still finding support right around 532. And the way things currently look here, it does look like we're going to see another break above this $5.61 mark. So, if you're bullish on the stock, what you really want to see here is for share prices to at least close above that $5.61 level for the trading period. If we see a movement below there and a close below there, you do start to then run the risk of a reversal here going forward, because we have to remember that the stock has seen a tremendous run higher here recently. This is a lot of upside price movement in a very short period of time, and an 89.77 reading in the relative strength index is an extreme reading. That is a very high reading, suggesting that the stock has moved into overbought territory. So, there are some potential warning signals here. As things currently stand, I do think that this is looking like we're going to see a break above 561. So as long as we can manage to close above there, the next clear level to the top side is this $6 level. And then that's going to be the next critical level. We need to see exactly what happens at that point, because there is risk for a failure. We're still trading in overbought territory at the moment, and we do need to see if share prices are able to break above that level. So here's the current stock market analysis for NIO Incorporated, stock ticker NIO. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.